What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl, Superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, when the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
And I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along. You know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Paramount or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life there is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed. It is Monday, April 5th, 2021, live from my home in New Jersey. I remember doing this before, and Tim's back in our Interactive Broker studio at Bloomberg headquarters.
I'm holding down the fort, Carol. Don't worry.
I'm never worried, counting on you. It's just kind of the world we're living in. A little bit of hybrid working, me at home, you at the office.
Yeah, you know what? It's okay. We can make it work.
It is okay. And I got to tell you, it's really okay when it comes to investors because they, at least equity investors, getting their first opportunity, Tim, to react to that strong Friday jobs report, and they are pushing stocks back to a record.
Yeah, they're certainly happy about that. Charlie Pellet is going to give us the details in just a second. In the meantime, we have a great show over the next 3 hours, Carol.
Yep, we're talking mutants, we're talking Tesla, we're talking dynamic growth stocks, and we're talking pizza bonuses.
Well, let's talk to Charlie Pellet because he has got a check of the latest headlines in business. Hey, Charlie Pellet, welcome
hello
back.
there. Thank you so much. Great to be back in the office. And we have got the Dow, the S&P, NASDAQ all advancing. I'm looking at records right now on this post-jobs Monday with the Dow up 388 points, a gain of 1.2%. Could not ignore the year-to-date numbers on the Dow, up now by 9.6%. Your S&P 500 index higher by 59, also a record there, up 1.5%. For the year, up by 8.6%. NASDAQ up 229. That is a gain of 1.7%. Right now, we have got the 10-year yield at 1.71%. Gold, lower a little change, down now by $3 the ounce at $17.25, a drop of just about 0.2%. West Texas Intermediate crude tumbling 5%, down $3.02 a barrel right now, 58.44. Stocks are rallying after solid economic data added to evidence the recovery is gaining momentum. Tesla shares rallying after reporting stellar first quarter delivery numbers. Right now, Tesla shares, they are up by just about 4%. Facebook shares climbing to a record, the social media company taking out a peak that has stood since August as fears fade about the impact of new privacy policies from Apple. Facebook shares, they are pushing higher, moving higher now, looking at a gain of Facebook by 3.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Welcome back, Charlie Pellet. All right, you are listening to Bloomberg Business Week. Let's get to the Market Drivers Report. All right, let's do it. Let's set the Business Week agenda on this Monday. And joining us to do just that is our own Dave Wilson, stocks editor at Bloomberg News. He's on the remote access in New Jersey. Voila, Dave. Equity investors are feeling pretty good.
And why not? I mean, the stocks that kind of led the way for the S&P 500 to get past 4,000 last week, well, they're leading the way again today. You look at the 11 main industry groups in the S&P 500, and you see technology, and you see communication services, which is the likes of Facebook and Google's owner Alphabet, and that consumer discretionary category, which includes, among a whole lot of others, Amazon.com and Tesla. They're the only three out of those 11 main groups that are up more than 2%. So they're leading the way. It's a big tech kind of day, just as it was, late last week when, we saw that milestone reached.
So what is it, Dave? Is it the excitement about the jobs report? Is it the ISM data that we got earlier today? Is it all of the above? I mean, what is making investors optimistic right now?
Well, it's probably a collection of those things, plus the fact that, you have this infrastructure plan moving through that President Biden is pushing. What that's going to look like in the end, who knows? At least there's something presumably coming. And it will shape itself as things progress and you get negotiations and all of that. But it's more kind of a continuation here, perhaps some optimism before we get into first quarter results, which we'll really start seeing the middle of next week. So, you put a lot of different pieces together and you get a day like today, and it really shows up to some extent in the travel stocks. I mean, they've been market leaders all day, especially like the cruise lines, Carnival, Royal Caribbean, Norwegian, all up at least 4% at the moment. And Norwegian is the best performer in the S&P 500, and Carnival is second. So there you go.
Yeah, going to catch up with Carnival CEO Arnold Donald later this week to talk about what the outlook looks like. I think what it is too, Dave, doesn't it feel like, listen, we have been hearing from a lot of our guests. You have these conversations as well, Tim and I both do, about, listen, folks, things are going to get better. And then when we get a monthly jobs report like we did on Friday, it's, a confirmation of that optimism that everybody's been talking about, that things will get back on track.
Yeah, and then you kind of add in the manifestation, you might say, of that optimism. People traveling, filling up planes, hotels, you name it. And it gives you a sense that, as much as the virus is still part of the day-to-day, we're getting a little bit closer to normal, and that's enough to get people optimistic here.
Hey, Dave, as we do get into earnings season and start to think about the next quarter for these companies, what are the questions that you think investors and analysts should be asking these CFOs and CEOs?
Well, it's really going to come down to, is the optimism justified? What are you looking at? And are you more willing to actually make forecasts? Because, there are still a fair number of companies, even in the S&P 500, that decided to withdraw their projections in March of last year and have yet to reinstate them. So that's going to be something to ask about and to see the results of as the first quarter results play out. Are we finally getting to the point where companies have enough confidence in their outlook to actually say, here's what we're anticipating for earnings or sales or whatever?
Well, as one thing that I continue to wonder, Dave, is when it comes to the records that we're seeing across the board, there's a lot of optimism priced in here, right? So these companies have to deliver, or else they're in for some real disappointment from analysts and investors.
Yeah, absolutely. And, they got to start delivering, in these next few weeks. And then, it's a matter of what's going to be justified based on what they have to say. You know, are people going to have more room for optimism? I mean, that was something I highlighted the other day, was that we actually saw numbers, analyst estimates for earnings go up during the quarter, which is, you know, as much as it's been the case the last few quarters, it's the exception historically. So that's a real sign of the optimism that's out there. And yeah, companies have to be able to kind of justify all these estimates in the way that they're moving up.
Listen, the theaters, they were hopping this weekend. Godzilla drawing them in.
Yeah, absolutely.
I mean, it's just another sign, right, that the world is kind of reopening.
Right, and then you see AMC Entertainment up more than 13%. And so, you know, I mean, even for AMC, that's a notable move.
I think it's those Godzilla fans. Having grown up with a younger brother, Tim, I'm just going to say, who's crazy about Godzilla.
Did you watch it, Carol?
Well, I did as a kid, those old, like...
I know, but it was on HBO
weekend.
Max, too. Dave, did you go see it?
I did not see it.
I did not.
Yeah, I didn't see it either. But yeah, I mean, close to $50 million in revenue for the opening weekend, which was a big deal. It doesn't sound like much money, but for a pandemic standard, it's a lot.
Right, and showing people are willing to go back to theaters when they can. Dave Wilson, thank you so much. Dave is our stocks editor at Bloomberg News. He's going to be along a little bit later on with his chart of the day and stock of the day. I heard him giving a deep tease with Paul Sweeney earlier on his chart of the day. Let's do the Bloomberg Business Week Bite of the Day.
It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Check out this number, Tim. Today's number, it is $1 billion. GameStop saying it may sell up to $1 billion worth of additional shares in the at-the-market equity offering program. Jefferies will be managing the offering of up to 3.5 million shares. According to a statement, the proceeds will be used to further accelerate its corporate transformation. That's a fundamental story for GameStop. Corporate transformation. It's not a Reddit platform or Robinhood talking about GameStop.
Right, it is. And this has been part of the story about GameStop for months now, that it's transforming from a traditional retailer into something that more represents an e-commerce player. Look, GameStop shares, when this was announced, fell in pre-market trading earlier today. But I think a big question is, why didn't they do this sooner? The stock up so much so far this year, it certainly makes sense that the company wants to raise money and take advantage of the share price.
Because they couldn't, maybe?
Maybe.
There's no investor interest? I'm just thinking, like, now there is? I don't know. It's to be continued is all I'm going to say.
Exactly.
To be continued, too, is our show. We're just getting started on this Monday. We've got a couple of the most read stories about the COVID mutants that are out there and what the scientists are doing to really get to those variations. Salt deduction, CEOs staying on society's sidelines. They can't do it. And then we're going to talk Tesla as well as talk some VC.
Well, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. U.S. Treasury Secretary Janet Yellen, in her first speech on international economic policy, is pushing for a minimum corporate tax rate.
Together, we can use a global minimum tax to make sure the global economy thrives based on a more level playing field in the taxation of multinational corporations, and spurs innovation, growth, and prosperity.
Yellen spoke ahead of the spring meetings of the International Monetary Fund and World Bank. The trial of a former Minneapolis police officer in George Floyd's death shifted today to the medical side of the incident. Dr. Bradford Langenfeld was the ER physician who tried to save Floyd's life. He was questioned by prosecutor Jerry Blackwell about what the paramedics reported as they arrived at the hospital.
Did they say to you, for purposes of caring or giving treatment to Mr. Floyd, that they felt he had suffered a drug overdose?
Not in the information they gave, no.
Did they tell you in the information they gave that they felt that Mr. Floyd had had a heart attack?
No.
Langenfeld says Floyd arrived at the hospital in full cardiac arrest. Defense attorneys have argued it is possible Floyd's death may have been caused by drugs. The U.S. Supreme Court says Google did not commit copyright infringement when it used Oracle's programming code in the Android operating system. Today's ruling spares Google from what could have been a multi-billion-dollar award. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. And, watching some of the vaccine and virus stories over the weekend, it does feel like we're making a lot of progress, Tim, in the United States. Michigan maybe being one of the outliers. They're having a tough time. But then I look at a country like India where they had, 100,000 cases in 24 hours. Mind you, huge country, over 1 billion people. I get it. But still, troubling and a reminder that parts of the world are certainly further behind. And I think of our conversation with Joe Stiglitz about the developed world has to help out the developing world if we're going to get beyond COVID-19.
Yeah, and a little later in the show, we're going to be speaking with Robert Langreth, who here at Bloomberg News, who wrote recently about COVID mutants, and that's a question that I have for him. To what extent do we know now how mutations come about, how they spread, and why we need to be vaccinating the entire world in order to prevent possible mutations from coming back and infecting us even if we've had the vaccine.
Right, and the scary part is that these mutations become more virulent. Can I say it right? Is that
I think so.
Virulent? Virulent. And basically more contagious and stronger. And so if they can spread much faster, I can't speak today. If they can spread faster through public and then be more serious, that's the whole idea of we're trying to get beyond that and ahead of that. So that's what it's all about. A couple good stories, though, on the Bloomberg talking about some of where we are. New York's vaccination program picking up speed last week with the most populous U.S. city reporting a record of more than 500,000 doses being administered.
Yeah, as far as the global tracker goes, cases around the world have surpassed 131.3 million. Deaths have exceeded 2.8 million. Worldwide, more than 658 million shots have been given. One thing that we're watching is the rollout of vaccine, not just here in the United States, but on a state-by-state level and how it's changing. New Jersey among the latest states to announce that it's opening up the shot to everyone who's 16 and older. Phil Murphy saying that's going to happen just a little bit later this month on April 19th. It comes as many states have already done that.
Yeah, exactly. So watching that, I know we're certainly watching that in our household. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ, they're all pushing higher. NASDAQ 100 index up now by 2%. NASDAQ Composite Index up 1.7%, advancing 231 points. Stocks heading towards records after solid economic data added to evidence the recovery is gaining momentum. American service industries expanded at the fastest ever pace. S&P up 59 to a record 4,078, up by 1.5%. The Dow's up 387, up 1.2%. 10-year yield 1.71%. Gold right now 17.26 the ounce, down 0.1%, lower by 2.40 the ounce. And West Texas Intermediate crude down 4.7%, 58.53 a barrel. Movie theater stocks rallying today following strong the box office opening weekend for Godzilla versus Kong, which B. Riley's Eric Wold says destroyed, quote, lingering concerns around theatrical window importance. AMC shares, they're surging 12.7%. As for Cinemark Holdings, up now by just about 7.2%. Recapping equities higher with the S&P up 59, up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stenovic. We talked about some of the recent virus headlines just ahead of this. Right now we've got global cases surpassing 131.3 million, deaths exceeding 2.8 million, and vaccines, more than 658 million shots have been given around the globe. So let's get our daily check. Back with us is Dr. Peter Alperin, Vice President at Doximity, which is a digital professional medical network for physicians. He joins us again on the phone in San Francisco, where he is in private practice. Dr. Alperin, nice to have you here with Tim and myself. How are you?
I'm doing well. Thanks so much for asking.
Well, tell me what you're seeing when it comes to COVID specifically, the cases that you're seeing, the kind of numbers you're seeing, and what you're seeing when it comes to vaccine and it really being rolled out to more and more people.
Yeah, so here in California, and specifically in Northern California, we've been able to really get going on the vaccine rollout. We've seen, certainly in San Francisco, over 20% of San Francisco residents are now completely vaccinated. That means they've had 2 doses and are on their way, so doing well that way. And 43% of all eligible adults have had at least 1 dose. We've seen case rates come down significantly. In January, of course, we were in the 300s per day, and now we're down into the 30s to 36 cases per day. So really doing well, and I think we're seeing all around the different counties in the Bay Area the ability for people who want to get vaccinated, if they're diligent, to be able to find an appointment.
What about those people who don't necessarily want to be vaccinated but should be vaccinated? I got my own first dose on Saturday. I'm really happy about it. I went to a drugstore that's participating here in New York State. And I was, I'm a journalist, so I asked questions. And the guy checking me in, I was talking to him, and I asked him if he'd gotten his shot yet. And he said, no, I'm actually skeptical about it. And this is the guy checking me in to get my vaccine at the pharmacy.
Yeah, that's what you're hearing, some nervous laughter there. So, of course, the health authorities, physicians, the CDC, all the major institutions, are strongly recommending vaccination, but it's still, it's still a struggle. I think it's just we need to continue with persistent messaging and continue with, the clear message that the vaccine is going to help, save lives and help put an end to this pandemic and bring herd immunity to the United States. But it's not an easy task, and people get their information in different ways. What we're seeing on Doximity, for instance, is a lot of conversation around using alternative ways of getting that information out. For instance, there was a recent, I think, a study I saw it on NPR, where they talked about using barbershops as an opportunity to help reach different communities, because those are the areas where people congregate. So I think it's really important that people get information from all the different places that they congregate.
Well, Dr. Alpern, what is it that people have the most questions about, or what is it that they don't understand? We had a great story recently in Bloomberg Business Week. This had to do with pregnant women specifically, and just on social media, how much disinformation is out there, and that when the medical community or the scientific community comes on to talk about a vaccine, it's very scientific in terms of the words that are being used, and it's not really warm and fuzzy. So what is it that people are so concerned? Because I remember months ago you even talking about doctors who are hesitant about taking the vaccine.
So, I think it's a couple things, but I mean, I think first and foremost, it's just really that people are bombarded with different types of information, and that people don't always get their information from places that I think are as reputable as others. For instance, one of the best things you can do if you have a doctor is to talk to your doctor about it. Your doctor will be able to give you that good information. And if you are afraid to go into the office, this is a place where something like telemedicine can really play a role. So you can have that conversation with the patient to tell them what are the different things and really suss out what it is that they're afraid of. Because people are concerned about different things, and sometimes you really just have to sit down and do it the old-fashioned way and talk to the patient.
It's funny you say it the old-fashioned way, because it's telemedicine is nothing. There's nothing old-fashioned about it, right? But it is old-fashioned talking to the doctor, I guess you could say. So I do wonder. Telemedicine over the last year has grown in popularity, obviously, because people have not been going into the doctor in the traditional way. But I'm wondering what it looks like on the other side of the pandemic when we are all vaccinated. Is telemedicine is it here to stay, or is it like a kind of a hybrid approach like we're going to see with workplaces?
Yeah, I think it's exactly that. It's going to be a hybrid approach. Are we going to have a situation where we did back in the height of the pandemic in April, May, and June, where the doctors' offices, many were closed, and it was difficult to get in to see anybody for anything that wasn't emergent? No, but I do think what you're going to see is this hybrid approach where a great many visits that used to be done in person are going to be done over telehealth, and it's something that I think is a real good thing for healthcare. It will allow people to be able to have a much better access, more convenient. People won't have to take time off work, and if you're an hourly worker, that's a really big deal. So you have to go to the doctor, you have to go into the office, all for a 15-minute visit, when in fact maybe you can just do that over the phone or through your computer, and that's why at Doximity we've built a platform to really help with that.
Well, sounds good. I mean, I agree with Tim too, and I agree with you that we can see kind of a mixture of this and giving a lot of accessibility, especially in maybe more rural communities where it's not so easy to tap into the medical network. Dr. Alpern, thank you so much. Be well, stay safe. Dr. Peter Alpern, he's vice president at Doximity, a digital professional medical network for physicians, joining us on the phone from San Francisco. How do you feel after your first shot?
I got to tell you, I had a not great reaction, but only in the sense of just feeling really tired.
Yeah.
So all the normal stuff, just really lethargic yesterday. But hey, if it means it's working, I'm happy.
Yeah, exactly. I think I felt the same way after it. I just thought I was tired from work and stuff.
Hard to know.
I know. All right, stick around. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I got to tell you, the story by Bob Lingreth, reading through it, you learn so much, like about the P1 strain and the B1 351 strain, but it terrifies me.
Does it?
Just, well, because it's a reminder that COVID's going to be with us for a long time.
It is, but it also makes me a little optimistic.
Really?
Yeah, because, we manage the flu. And if we have to get a booster shot every year or a vaccine similar to the way that we get the flu vaccine, then that's manageable.
All right, well, get ready, everybody. He's the optimist. I'm a little wary here. All right, first up, let's get back to your top business stories. A check on that trading day. Here is Charlie Pellet.
Hi, thank you very much, and happy Monday once again to you both. We're looking at records for the Dow and the S&P 500 index. NASDAQ, we begin there up 1.7%, higher by 231 points, but the S&P climbing toward another record after solid economic data added to evidence the recovery is gaining momentum. The dollar retreated, treasuries mixed, oil sinking. West Texas Intermediate crude right now plunging 4.3%, down $2.67 a barrel, 58.79. We've got the S&P at a record up 59 to 4,079, up 1.5%. The Dow's up 394, up now by 1.2%. Dow Transport's up 1.2%. NASDAQ 100 index up 2.1%. Russell 2000 up now by 0.3%. 10-year yield 1.71%. Gold down 0.1%, 17.27 the ounce. New York's vaccination program picked up speed last week, with the most populous American city reporting a record of more than 500,000 doses administered. City also is stepping up its use of mobile units and pop-up sites. And everyone in England will be urged to take a coronavirus test twice a week, as a new system of COVID passports is assessed for wide-scale use. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health, and he says as the U.S. makes great strides in getting people vaccinated, we cannot ignore the rest of the world.
I think at this point, it shouldn't be a question of whether we're going to help the world get vaccinated, but how and how quickly can it realistically be done. We should take the same sense of urgency that we had for vaccinating the U.S. population, because really it's one world and it's humanity versus the virus.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer lower today by 0.2%, BioNTech up by 0.4%, AstraZeneca up 0.2%, Moderna is down now by 2.1%, Johnson & Johnson up by 0.3%. Our conversation on vaccine continues. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Always, always more to learn. Thank you so much, Charlie Pellet. This is among our most read stories on the Bloomberg. And this is, a chapter in the COVID pandemic, Tim, that we're closely watching. It's all about variants and the COVID mutants that are multiplying. And we know scientists are constantly on it, analyzing them.
Well, if you've got questions about variants, Bob Lingreth has answers about them. He's healthcare reporter for Bloomberg News, joining us on the phone from New Jersey. Bob, it's great to have you back on the show. Carol and I were talking about being optimistic or pessimistic about this. After your reporting on variants, are you on the optimist side or are you pessimistic?
Well, I guess what I'd say, is that there's a worry out there that we're going to need just constant booster shots, like all the time, like every year. And, some of the drug companies even have talked about that possibility. And while that's ruled out, the sense I got overall from talking to researchers is it's really not clear this virus is going to be able to mutate, that fast that we'll just endlessly need booster shots. It does indicate, it might mutate, but maybe not at that rate.
Maybe I'm not being realistic here, but is it so bad that we'd have to get a booster shot each year? Is that really hard for the majority of Americans? I know that not everybody has access to an office that provides them with a flu shot, but if I think about it from the perspective of a flu shot, it is pretty easy to get a flu shot, and a lot of people do it. Not everybody, and not as many as need to, but is it such a bad thing if we need a booster shot every year?
I mean, I guess that's not such a bad thing. It's obviously it's much better if if it could be.
But my bar is low. Here we are walking around wearing
much
masks.
less often, yeah.
I have a low bar right now. We're not being able to see anyone, right?
I wonder about.
Well, right. Right now, there's this B.1.1.351, and this is the strain that arose and is common in South Africa. That's the one that's shown perhaps, the most ability to partly evade or reduce, the antibodies produced, by vaccines, and that that's the most so far. And it looks like the mRNA vaccines will still have efficacy against that one. So we really have to wait and see if there's other, evading mutations and how quickly those arise. It's just not clear yet how quickly they're going to arise.
I guess what I'm wondering is if we don't get enough people vaccinated to get the herd immunity, do we create mutants that are going to require not just a booster but a rework on the vaccine? Or will it constantly be just a rework on the vaccine that allows us at some point to get ahead of it all?
Yeah, so I mean, the one beauty of the mRNA vaccines is they're easier and quicker and easier to kind of revise than other types of vaccines because the production of mRNA vaccines, like the ones from Pfizer, BioNTech, and Moderna, doesn't require growing things in live cells. It's like this is synthetic enzyme chemistry, and it's faster to revise. And both companies are already testing, booster shots that are customized against the B.1.351 strain that was common in South Africa. So they've already pushed those into human trials. So, they can move pretty fast. But certainly, given the large number of people in the world we have yet to vaccinate, U.S. is ahead of most countries, well ahead. A better situation would be where we wouldn't, at least in most parts of the world, need any sort of new shot for a while until we can get, most of the world vaccinated with kind of the first strain.
And what's the timeline looking like for that?
Well, I mean, the U.S. is moving along fast, but other countries, other parts of the world are behind. The European Union is behind, so there are a few countries that are moving fast. The United States, the United Kingdom, Israel, Chile, I heard. But a lot of countries are well behind that timetable, and partly of that, part of that is just the manufacturing constraints. So this is going to take a while.
Yeah. Okay. So you are optimistic. Just 30 seconds here.
I am. I'm optimistic. In terms of, I am of a wait and see. From what I've heard from the researchers, I think it's a, wait and see standpoint in terms of like when we might need a booster shot and how often we might need a booster shot. And there's some optimism out there that, this thing there could be some long-lasting immunity, either from getting an infection or from the first round of vaccines to severe cases of COVID-19. And if that is true, even if the immunity to like milder cases and infection wanes, what the research shows what you get is kind of over time is more of a cold type scenario where you can't get reinfected, but the symptoms are mild.
Right. This is why we've talked with folks about developing a vaccine for T-cell immunity, development of that. Bob Langreth, great stuff. Healthcare reporter at Bloomberg News on the phone in New Jersey.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Treasury Secretary Janet Yellen says she wants to end the 30-year race to the bottom in which countries have slashed corporate tax rates in an effort to attract multinational businesses. So she's working with G20 nations to agree on a minimum corporate tax rate to level the playing field. She told the Chicago Council of Global Affairs today it's important all governments have stable tax systems that raise sufficient revenues to respond to crises. Well, the U.S. is working on an almost $1 billion tariff plan over digital taxes. Bloomberg's Ann Cates reports.
The U.S. is pressing ahead with efforts to penalize 6 nations that hit internet-based companies with retaliatory tariffs. Goods entering the U.S., ranging from Austrian grand pianos and British merry-go-rounds to Italian anchovies, could face tariffs of as much as 25% annually. The duties are in response to countries that are imposing taxes on technology firms that operate internationally, such as Amazon and Facebook. According to Bloomberg calculations, the annual value of the U.S. tariffs comes to $880 million. In Washington, Ann Cates, Bloomberg Radio.
The Supreme Court is giving Google a big win in its dispute with Oracle. The case involved a copyright dispute over software in the Android mobile operating system. Oracle had sued Google over thousands of lines of code that Google used to construct Android. The Supreme Court overturned a lower court order and said Google's use of the code is protected under a copyright doctrine involving fair use. Oracle responded to the ruling saying Google stole Java, and that behavior is why regulatory authorities around the world are looking at Google's business practices. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, along with Tim Stenovic. Man, this is a big, big story. What's going on in Georgia specifically, and more restrictions recently passed when it comes to voting. And what is the responsibility of the corporate community to come out and speak against it? And there's a lot of pressure on leaders to do such. We're going to get into that with our own Joe Nocera in just a minute. But there's a story on the Terminal, Tim, that talks about Senator Marco Rubio, who wrote a letter to Major League Baseball Commissioner Rob Manfred, asked if he planned to maintain his membership at Augusta National in the wake of the decision to move this year's All-Star Game from the state of Georgia.
Yeah, here's what he wrote in the letter. Quote, I write to ask you whether you intend to maintain your membership at Augusta National Golf Club. As you are well aware, the exclusive members-only club is located in the state of Georgia. That's what Rubio wrote to Manfred. On Friday, Manfred said relocating the game and MLB draft was, quote, the best way to demonstrate our values as a sport, saying that the MLB fundamentally supports voting rights for all Americans and opposes restrictions to the ballot box.
Right, exactly. But did not specifically mention Georgia's new election law. Listen, I'm not going to name names, but we were going to have a guest on today, and I think it might have been a leader who maybe got a little gun shy because there's a lot of criticism of some of the major corporations in particular, really around the country, but a lot of those that are in Atlanta specifically and Georgia specifically overall about their responsibility to speak out against this law. And, you know, companies have always been very careful when it comes to political things. We talk about this a lot, Tim, when it comes to doing business in China and not agreeing with maybe human rights violations or privacy violations, and yet companies are very careful about what they say publicly.
And we're seeing this fall along party lines like so much we see in America right now. The governor of Texas, a Republican, tweeted that he would not throw out the first pitch for the Texas Rangers in their home opener on Monday afternoon, adding that the state will not seek to host the All-Star Game or any other MLB special events. I think this is a question that a lot of company CEOs and executives have to think about and weigh when it comes to how they're thinking about how they're standing.
Yeah, there's a lot to go here. We'll get more in just a moment.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks holding near session highs. Records right now for the Dow Jones Industrial Average and the S&P 500 Index. Stocks are rallying after solid economic data added to evidence the recovery is gaining momentum. S&P up 57, up 1.4%, now at a record 4,077. The Dow's up 380, up 1.1%. Nasdaq is up 227, higher by 1.7%. 10-year yield 1.71%. Gold is down 0.1%, 17.26 the ounce. And West Texas Intermediate crude down 4.4%, 58.76 a barrel. GameStop shares are lower after the company said it may sell up to $1 billion worth of additional shares in one of the largest at-the-market equity offerings ever announced for the retail sector. GameStop shares, they are trading lower now, down by 4.2%. Recapping, stocks move higher, S&P up 59, up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Well, no doubt about it. Tim and I were talking about this. CEOs, they cannot stay on society's sidelines anymore, and that is what Bloomberg opinion columnist Joe Nocera writes about. He's also a Bloomberg Business Week regular. He notes that today's corporate chiefs no longer closely aligned with the Republican Party, and they face a lot of pressure to wield their considerable influence on a lot of important issues. Joe is with us on the phone in New York City. Joe, of course, also writer and host of the wildly popular podcast, The Shrink Next Door, which Tim, along with his wife, recently binged on big time.
It was awesome.
It was awesome. Also with us is Bloomberg Business Week editor Joel Weber on the Access Line in Brooklyn. So, Joel, let's kick it off. I feel like the last year we have seen a lot of CEOs. There's been a lot of pressure on them to talk about some very important issues.
Yeah, I think one of the themes. Oh, that was to me first, Joe. I know our names sound so similar. I'll kick to you in a second. You know, I think just to put this on a platter for Joe, I think the change that we've seen this year is one from CEOs being able to silently stay on the sidelines, benefit from things like corporate tax rate cuts, and the social issues that are confronting society. Are beginning to change their ability to do so. So Joe, over to you. What do you think's changed, Joe?
Thanks for the platter there, Jay Webb.
It's a big
I prefer J Dub.
Well, you know, one of the things that changed is that the Republican Party has become much more extreme. And so the sort of moderate Republican that corporate executives often personify and the people that they have kinship with in Congress are really becoming a rare species. And so you get things like, Black Lives Matter and George Floyd and now the most recent one, with the voting rights bill, CEOs don't feel like they have any choice. There's no counterpart pushing against that has the same clout as corporations. And secondly, and do not underestimate this, the employee base wants the CEO and wants the company to stand for these things. Mm-hmm. And it's hugely important in terms of recruiting, in terms of how you position yourself with your employees. African-American employees, but also white employees, they're in favor of these things, and they want their companies to push back against some of these extremist measures.
Does it start to go further than statements, than strongly worded statements? Does it start to go with investment or lack thereof in certain places in response to bills such as these?
Well, go back to North Carolina. Okay, a few years ago when they had the bathroom bill, where you could only go to the bathroom, public bathroom, with the sex of your on your birth certificate. So it was an anti-trans bill. There was a boycott. Companies stopped having conferences there. The NCAA pulled out, and eventually, after North Carolina was both embarrassed and lost a bunch of money,
they withdrew the bill. The bill was withdrawn. So you've already got Major League Baseball pulling the All-Star game from Atlanta. Now, some congressmen have pushed back on that, but in truth, the corporations have clout here. Is Coca-Cola going to move its headquarters? Probably not. But there are certainly a lot of things corporations can do to inflict a little pain on Georgia in terms of conferences, in terms of using Delta Airlines and so on. So you definitely could see corporations putting pressure on Georgia and on the other states too. Already, American Airlines has come out against the voting rights bill that's up in Texas.
But what's interesting, Joe, is that initially, like some of those big companies in Atlanta and Georgia, they knew this was coming. It wasn't a surprise, but didn't stop it before it was passed. It wasn't until afterwards where there was a lot of pressure. So I do wonder, what is it? Is it just that when they're finally forced to, that they make a stand?
Well, what does it mean to be forced to? I mean, I think that these black CEOs who put together the letter of protest, and then Ken Chenault, formerly of American Express, and Ken Frazier of Merck, they know a lot of these guys, and they get on the phone with Ed Bastian of Delta and say, what are you thinking? We need you, we need Delta, and I think guys like Bastian are very susceptible to that, and they want to be on the right side, and what Frazier and Chenault and the others are saying is, you want to be on the right side of history. You want to be like Woodruff and Coca-Cola in 1964 with the Martin Luther King dinner, where he threatened to have Coke leave if businessmen didn't go to that dinner. You want to be on the right side of history. You need to be with us, and I think that's a powerful argument.
Joe, there's an aside that you have in your story that really caught my attention, and I thought it was sort of a uniquely Bloomberg angle, which is that, and you spoke with a Wharton professor about this idea that activist investors are actually the ones that have sort of paved the way for the conversation that we're seeing now. And I'm wondering, we talk about ESG a lot and what activist investors can accomplish. And I'm curious, like how much of Wall Street can we credit for ability to affect corporate change?
Well, I don't think Wall Street spends a lot of time worrying about ESG. But what the corporate activists have done is shown basically the outside world that companies can be pressured, that companies can be forced to change, that it's a little different because the corporate activists want the stock to go up, but the lesson, I think, has come through loud and clear, and the idea that corporations can stay on the sidelines anymore, I mean, it's just not there.
So what's your takeaway then from all of this? Because I do feel like we've heard from a lot of CEOs, especially as one started stepping out in this past year. Money always talks, ultimately.
Right.
So just got about 30 seconds. You're kind
okay.
of,
So
yeah.
Right. So here's what I say. Here's what I think the big test is. The big test is whether companies and their PACs will continue to refuse to fund the Republicans who denied that President Biden had won the election. There's 140 of them in the House and a handful in the Senate. And so many companies have said, we're not going to contribute to them anymore. Well, 2 years is a long time. So let's see whether they stick to their guns.
Yeah, exactly. Right. Because we saw after the riots how people were kind of slowing down or stopping their donations. But let's see if it lasts in the longer term. Joe Nocera, we always love when we get some time with you. Bloomberg opinion columnist Joe Nocera, a Bloomberg Business Week regular, along with Joel Weber. For those of you listening in New York, D.C., and San Francisco, Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business. It's next.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this back-to-work Monday after a long weekend for a lot of people. The Dow, the S&P, NASDAQ all advancing. S&P and the Dow both trading at records after solid U.S. economic data added to evidence that the recovery is gaining momentum. The dollar retreated, treasuries mixed, oil sank. Most major groups in the S&P 500 rose, with the gauge extending gains into a third session. S&P up now by 55 points, up 1.4%. The Dow up 352, up 1.1% off session highs. NASDAQ up 230, up 1.7%. The NASDAQ 100 index up now by 2.1%. 10-year yield 1.71%. Lori Heinell is Global Chief Investment Officer at State Street Global Advisors.
On the equity front, we are very overweight U.S. equities right now. We do not like treasuries at these levels. We think that there's going to probably be more of a backup here, particularly as the Biden plan starts to take shape. So we could be looking at a two-handle. But we will be looking for entry points at that level because we still have very attractive rates in the U.S. relative to other places in the world. And given that investors still have mobility around their capital, at some point treasuries will look attractive, but not today.
And again, that 10-year yield right now 1.71%. Gold is down 0.1%, 17.27 the ounce. Sam West Texas Intermediate crude down 4.4%, down 271 a barrel to 58.74. Norwegian Cruise Line Holdings plans to start cruising from some American ports on July 4th, with fully vaccinated guests and crew potentially ending a hiatus from such voyages that began in March of 2020. It's unclear if the government's going to go along with that timeline. Norwegian Cruise Line Holdings shares, they are advancing now by 7.3%. Carnival Corp up 5.2%. Royal Caribbean up 3.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And Bloomberg Business Week, it is brought to you by SEI, with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/IMS. Well, one of the big stories we're watching this week is the political and public talk surrounding President Biden's $2.25 trillion infrastructure plan. Bloomberg New Economy editorial director Andy Brown writes about the plan and how that massive infrastructure spend is really part of the president's new plan for dealing with China. I love this think on this story. Andy joins us once again on the phone in New York City. So, Andy, talk to us about what you wrote about in your weekly column.
Yeah, so it just seemed to me that for so long, the United States has been playing entirely the wrong game against China. So, having labeled China a competitor, a rival, even an adversary, the brunt of the effort has been trying to trip China up, right? To hold China's advance back, to block the advance of this competitor. And it kind of feels so defensive, so reactive. And the rest of the world, by the way, doesn't really go along with this. Most other countries want China to succeed so that they can enjoy the spoils of success. And what this Biden infrastructure plan does, it flips all this around. Everybody knows that America plays the best game, a game of offense, right? That's what America does best. It doesn't do defense best. This infrastructure program, $2.3 trillion, as you say, to fix roads, build airports, build networks, sort of an infrastructure fit for the 21st century, kind of feels like America is now moving in the right direction. It feels positive. It feels forward-looking, right? The future is in our own hands type thing. And to me, it just changes the game. I mean, and puts America in for the first time, I think, in a really strong position to compete against China.
Andy, one challenge, though, is that certainly how Democrats are positioning it. But, on the Sunday shows yesterday, Republican after Republican pushing back on this infrastructure plan, talking about how there isn't much actual infrastructure in it, despite the fact that it does include 5G and broadband and the like.
Yeah, well, look, to me, this shows that people who argue against this just don't get how dire the situation of infrastructure is, perhaps. I lived in China for the last 20 years and saw the infrastructure that they piled in, starting with their first high-speed rail line, which was in preparation for the 2008 Olympics, just a very short line between Beijing and Tianjin, the port. And within 10 years, China had a high-speed rail network that is now that was bigger than the rest of the world combined, and they're just about to add another 30% to its length. And people in China, looking at that infrastructure going in, had this visual cue, this visual understanding that their economy was getting better and better all the time. They could feel it. They could see it. They could see all this going in. And sometimes I just have an impression that people in the United States are looking at this crumbling infrastructure and they're not getting how this is really corroding the heart of America's competitiveness. I'm looking out right now over a section of the Brooklyn-Queens Expressway, which in 4 years' time is going to have bits falling off it and may have to close. And it's like carries 200,000 cars a year. All of these problems have been boiling for so long, and politicians have done nothing about it. So it doesn't kind of surprise me to hear this sort of pushback to the Biden plan, to be very frank.
Well, what's interesting too, Andy, and you write in your column, you say the Trump administration had virtually nothing to show for its all-out tariff war with Beijing. So we've been in a battle, and we've been doing it through tariffs. But what do we have to show for it? And you also talk about how we are constantly blaming China for what ails us in the United States. The Biden plan, and I'm not trying to be political, but it's a step to invest in the country's future rather than point fingers or use something like tariffs, which haven't really done anything for us.
Yeah, so the Trump administration gave this its best shot, right?
Mm-hmm.
And they put 25% tariffs on just about everything that China produces, China has actually in that time has expanded its global share of trade, right? The trade surplus, China's trade surplus with the United States is bigger than it ever has been. So really that piece didn't work. The most successful part actually of the Trump economic agenda against China was on the tech side, denying China technology. And look, that's definitely going to be part of the strategy. I mean, China does represent a security threat to the United States. We talk a lot about China's human rights abuses, and the way that it's selling this surveillance technology all over the world, and the tech that it's exporting is imbued with Chinese authoritarian values. All this is true, and that definitely should be part of the effort. But the real game changer is going to be America fixing itself. That's going to give U.S., by the way, the credibility it needs to build the international coalitions, the democratic coalitions that President Biden keeps talking about, to stand up to China. First of all, it needs that domestic credibility. We're getting our political system in order. We're getting our economy in order, right? We're building for the future. Join us on this great crusade, if indeed that's what it is they're launching.
So, Andy, it raises the question if talking about China in the sense of this infrastructure plan is the right way for Democrats to sell this to Republicans, because there is some agreement on taking on China. And indeed, the third sentence of the fact sheet about the American Jobs Plan that was released on March 31st, it has the word China in it. And it mentions China 5 times in 24 pages here. Is that the right way to get Republicans and Democrats to see the same way?
Well, I think very deliberately that's the way the Biden administration has been selling it, because it is the one issue on which Democrats and Republicans can agree. That China is a threat and needs to be countered. But look, it's not really. This should not be such a tough sell. China now is already putting in 5G networks, right? And these networks are powering all the industries of the future. And if the U.S. doesn't have a 5G network, the next Google, the next Facebook, the next, all the big tech giants of the future are going to be Chinese, not American. Is that what America wants?
Right. And I love how you say that China, what President Biden is looking to do, China isn't planning for this. So this could really throw them off course. All right, Andy Brown, editorial director at Bloomberg New Economy. Let's get back to World and National News and Nancy Lyons. Hey, Nance.
Hey, Carol. 4 million vaccine doses were administered Saturday. Nearly 1 in 6 American adults have now been fully vaccinated as the number of new cases continues to rise. Bloomberg's Irv Chapman has the latest.
The spread of more transmissible variants is one reason for the increase in cases, the director of the Centers for Disease Control, Rachel Walensky, said, but not the only one.
We are now entering our 4th week of increased trends in cases, predominantly in younger adults. We are learning that many outbreaks in young people are related to youth sports and extracurricular activities.
Dr. Walensky also cited a report from Illinois on the reopening night of a bar where 100 patrons crowded in, and 46 new cases resulted, including to friends and relatives of the customers. In Washington, Irv Chapman, Bloomberg Radio.
The emergency room doctor who pronounced George Floyd dead after trying to resuscitate him testified today he theorized at the time that Floyd most likely died of suffocation. Dr. Bradford Langenfeld describes what paramedics told him as they arrived at the hospital.
They reported that on their arrival, the individual did not have a pulse and CPR was started. They placed an eye gel, which is a supraglottic airway device. It's basically
a super what?
Supraglottic airway device. It's just a sort of a tube that goes down into the throat and can ventilate the lungs.
Langenfeld said it was quickly clear to him Floyd could not be revived. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. It is Monday. I'm Carol Masser. I'm working from home today. Tim Stenovic back in our Interactive Brokers studio in New York City. And a great story by our Luke McGrath, written up based on a conversation that Apple's Tim Cook had with the New York Times Sway podcast. It was released today. They covered a lot of subjects.
Yeah, they did. And here's one that might surprise some people, considering it doesn't feel like Tim Cook has been CEO for that long. Tim Cook doubting that he'll be at Apple for 10 more years. Remember, though, he's been doing this for a decade, and he's 60 years old. He says 10 more years is a long time, and probably not 10 more years.
Yeah, that's pretty remarkable. Listen, this is someone that I know, you think about it. How many conversations did we all have after, the unfortunate illness and death of Steve Jobs about who could carry the company? And Tim Cook was someone who'd been there for a long time, understood, had been operationally very involved in making the things that Steve Jobs wanted to actually happen. And I do wonder about who they're grooming right now to kind of, take the baton and kind of carry the company for the next 10, 20 years.
Yeah, at this point, Tim Cook has been with Apple for 23 years, and he's been the CEO for a decade. They also talked about a lot of other stuff in this podcast, a wide range of topics, including the controversial Parler social media app that was blocked by Apple earlier this year, Apple TV Plus, and autonomous vehicles as well. He said that in some ways it was a straightforward decision because they were not adhering to the guidelines of the App Store. You can't be inciting violence or allow people to incite violence. That's what he said on removing Parler from the App Store.
Listen, I want to go back to some stuff he said about Tesla, because we're going to talk a little bit more about Tesla because the stock's moving in today's session. But he was asked about Elon Musk's claim that he once tried to hold talks about the possibility of selling Tesla to Apple. Said that Tim Cook said he's never spoken with Musk, but that he has great admiration and respect for the company he built. Here's a quote: "I think Tesla has done an unbelievable job of not only establishing the lead, but keeping the lead for such a long period of time in the EV space." And so didn't really reveal any clues about what Apple might do in this space.
Yeah, not so surprised. Keeping those cards close.
Yeah, no surprise at all. All right, you're listening to Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. The S&P 500 index carving out another record. Let's head right over to the First Word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. Stocks in the green today from the start, helped by those job numbers on Friday. Dow's currently up 374 points. S&P's up 56. NASDAQ climbs by 1.7%. The U.S. 10-year yield at 1.71%. Gold is down 2, and transports rise 139 points. Among the main 11 S&P sectors, consumer discretionary and telecom led, and only energy and real estate fell. Leaders to the upside in the Dow, Walgreens and Intel, while Goldman Sachs and Chevron to the downside. In other news, GameStop paired losses to 4%, was down 14% after offering up to $1 billion in stock. And in deal news, Sempra to sell a stake in Sempra Infrastructure to KKR, $3.4 billion. Wrapping things up, Microsoft, Google, and Facebook all traded to record highs. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, Tesla shares, as we've been hearing, they are rallying today. They're up 6.3% as we speak. Still pretty flat for the year overall. This is the company's estimate-smashing deliveries of electric vehicles in the first quarter suggest that Elon Musk making some bets on China and Europe that they are starting to pay off. So let's get into it. Bloomberg technology reporter and all things Tesla. She keeps an eye on it for us here at Bloomberg. Dana Hull, she's joining us on the phone from San Francisco. Dana, nice to have you back with us. So tell us about this quarter.
Yeah, so I think this was just a classic kind of expectations game. In January, the CFO of Tesla, Zachary Kirkhorn, really downplayed the first quarter. He talked about the semiconductor shortage, which is plaguing the auto industry as a whole. He warned about, backups at ports. He made it clear that they're transitioning to a new version of the S and the X and that production would be really low. So Wall Street was not expecting this kind of quarter at all. And so it was that classic thing where, all of the analysts had low estimates, then Tesla comes in way above, and now you're seeing the shares rally as a result.
So we've been managed, is what you're saying.
I think that's definitely a part of it. I mean, the first quarter is typically slow for the auto industry as a whole, and certainly Tesla has had previous first quarters where they really bombed. So the fact that this was their strongest first quarter ever, and that they actually grew sales over the fourth quarter was a big thing. Now, you are seeing a lot of skeptics and bears point out that it wasn't really that much growth. It was only 2%. And given that they have 2 plants now, shouldn't the growth be more than that? But given all the other sort of tailwinds in the economy with, coming out of the coronavirus and the semiconductor shortage, I mean, this is a strong quarter for them, and it bodes well for the rest of the year.
So, Dana, what do we know about geographically where these cars were sold and who bought them?
Well, we really don't know very much. I mean, Tesla releases global deliveries, and that's it. They don't tell you where they were sold. But if you saw Elon Musk's tweets today, he sort of gave a shout out to Tesla China, and we know that the U.S. and China have typically been the strongest markets. I think it's a fair assumption that China helped quite a bit. Here in the U.S., a lot of customers are kind of waiting to see if President Biden might restore the federal tax credit for electric vehicles. So there's a sense that, there's a hangback in the U.S. while markets in China and Europe are stronger.
So what I keep wondering, though, Dana, and you know this company well, and you watch, the competitors that are out there, Volkswagen, all of, the big auto companies are finally like, okay, we're finally doing it. We're going after the EV market. Does Elon have to be worried? And does he have to be worried about China specifically, which is such an important market, especially when we know President Xi wants to develop all of those domestic EV makers?
I mean, there's certainly more competition there's certainly more competition in that there are now more electric vehicle offerings. But I think that, you have to sort of think about the auto market as a pie. Right now, electric vehicles are a very small share of that pie. And the goal of everyone is to kind of grow that electric share. And so it's, I feel like the focus on the competition is a little bit off base because the real competition is between electric vehicles and ICE cars. If you can get someone who's driving a gas-powered car to buy electric, that is the goal. And so, like, Tesla has always said that they welcome the competition because there's more offerings for everybody. And we've seen that the competition is now here, but, like, Tesla is still selling cars. They haven't reached this demand cliff that we keep hearing about. They still, they obviously face competitive threats, but it's like they have pushed the industry into going electric, which is a good thing.
Yeah, absolutely.
And now people can really comparison shop. You can choose among many electric models and what is right for your price range, for your range needs. That's overall a good thing. I just sort of feel like we need to think about growing the pie, growing the electric share of the pie versus just making it this fight between the electric models.
Hey, Deanna, now that the company has released those delivery figures for the quarter, what is the next figure that investors are going to be keeping an eye on? What else moves the company's stock?
So I think the deliveries are a big part of the earnings report, which will come either later this month or early next. And I think the big question is going to be about margins because this quarter they did not deliver any. They delivered about 2,000 S and X's, which are sort of older inventory models. They did not deliver any of the newly refreshed S and X's. So this is overwhelmingly 3 and Y, which have much lower gross margins. So that'll be a question for investors. But I feel like investors have a lot of questions. They want updates on the Gigafactory being built in Texas and Berlin. They want to know about AutoBidder. They want to know about full self-driving. They want to know about the insurance. Tesla has all of these kind of ancillary things that it's getting into. They want updates on the Cybertruck. So I think it'll be a really interesting call in terms of the questions that the company gets.
Yeah, it does feel like it's gearing up to be an interesting year, too, for the industry overall, the EV industry, but certainly Tesla once again. Hey, Dana, thank you so much. Always appreciate it. Dana Hull, she's technology reporter at Bloomberg News, joining us on the phone in San Francisco, as I mentioned, though, and we've been hearing from our market reporters. We are seeing Tesla certainly rally in today's session. Was up as much as 7%, Tim. It's still up about 6%, but we know it's been taking a little bit of a beating this year because it's pretty much flat on the year.
Yeah, pretty much flat on the year, just down 0.6% right now.
But after gaining 743% last year.
That is the important context, right? High expectations.
Exactly. All right, stick around, folks. We're going to do the chart of the day with our own Dave Wilson and then count you down at the closing bell just about 35 minutes away. You're listening to Bloomberg Business Week. Carol Master, Tim Stanovic. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, I was so excited I jumped the gun a little, Carol.
That's a good thing. I like being excited about something.
It's because it's that time of the day.
It is that time of the day. We're talking about the chart of the day. Dave Wilson, he did a deep tease earlier this morning, so I'm kind of looking forward to it.
Wow, you've been waiting all day for it.
I have been.
Song of the day, too.
Dave is going to be along in just a second. First up, though, let's get back to the trading day once again with Charlie.
All right, I thank you very much. And here's what's going on. We've got 28 minutes to go ahead of the closing bell. Right to the numbers. The Dow up 358, looking at a record, up 1.1%. S&P up 52, up 1.3%. The NASDAQ Composite Index up 200 points, up by 1.5%. Dow S&P on track for records. NASDAQ 100 Index up 1.9%. Russell 2000 higher, up by 0.2%. Stocks climbing toward another record after solid economic data added to evidence the recovery is gaining momentum. Most major groups in the S&P 500 are higher, with the gauge extending gains into a third session. 10-year yield 1.71%. Gold is down $1.94 the ounce, down 0.1% at $17.26. And West Texas Intermediate crude down 4.5%, $58.68 a barrel. New York's vaccination program picked up speed last week, with the most populous American city reporting a record of more than 500,000 doses administered. The city also stepped up its use of mobile units and pop-up sites. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health, and he told us, as the U.S. makes great strides in getting people vaccinated, we cannot ignore the rest of the world.
Look, the U.S. had the worst outbreak. It's totally understandable that we focused on the U.S. First, but now as vaccines become available to everyone and we continue to push into areas and communities that need the vaccine in this country, we have to also be increasing our focus on the rest of the world.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we follow, Pfizer shares down 0.2%, BioNTech up by 0.4%, AstraZeneca up 0.1%, Moderna is down 1.8%, Johnson & Johnson up by 0.2%. Recapping 10-year yield 1.71%, S&P, the Dow both at records, S&P up 53, up 1.33%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. Maybe.
Maybe, might be.
I mean,
sorry, Tim.
Carol just calls me out. I know she's doing it for the good of the listener. I can't.
All
I
these
have
older
to be honest.
siblings around me, we were calling each other out.
Waiting on a song and an artist.
Aerosmith is the artist.
Okay.
Same old. Well, it's like same old. I don't know. Same
old song and dance.
Same old song and dance.
It's not rocket science, right?
Yeah.
No,
apparently it is for us.
Not when our producer Paul Brennan plays the chorus.
Thank you, Paul.
In any case, why that song, I guess, is the obvious question. So let's take a look at that. You look at what went on last week, and it's really actually going on today. With the S&P 500 going above 4,000 for the first time and then moving up from there. And how did it happen? Well, it wasn't the kind of movement you saw in the first quarter, that's for sure. It was sort of a return to the dominance of the big tech companies. And, that includes technology in the narrower sense, along with communication services, the likes of Google's owner Alphabet and Facebook, and then you throw in the consumer discretionary category with Amazon.com and Tesla. Those kinds of stocks. I mean, specifically the 5 biggest ones. So you're talking by market value. Apple, Microsoft, Amazon.com, and Google as well, Alphabet, and Facebook, right? 40% almost of the gains. And I bring up that number in terms of what happened specifically on Thursday, when it was 36%, so we don't round off. You look back to how the S&P 500 got from 3,000 to 4,000, and by the way, 3,000 wasn't all that long ago. It was the middle of 2019, July to be precise. 40% of the move over those 1,000 points came down to those top 5 stocks. So Apple, Microsoft, Alphabet, it's 2 classes of shares in the S&P 500, Amazon and Facebook in that order in terms of the effect on the index. So, it just goes to show you it's the same old song and dance going on in the stock market right now. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So, but you also point out that during the first quarter, we saw the Fab Five, as you remind us that they are often called, didn't produce much of the S&P 500's advance.
Yeah, I mean, something like 5%. And the reason that was the case is that you had Amazon and Apple falling in the quarter. And in fact, they weighed on the S&P 500 more than any other stock. So that largely offset the gains we saw in the rest of the group, Microsoft, Alphabet, and Facebook. So it was a split decision in that sense. It wasn't like it was all the way up, and certainly late last week into this week, where you saw all 5 of them moving as a group.
So are you saying that it's these 5 names that are getting us through these milestones, even though they were kind of lagging in the first quarter?
That's sort of how it's shaken out anyway. Okay. I mean, it was just striking, Wednesday and Thursday. Of course, we had the holiday shortened week last week to see the old the old standards come back, the familiar leaders return. That was the thing that was sort of worth noting, and we got the numbers on the Bloomberg terminal to show all that as it unfolded.
Dave, is it concerning at all that there is so much of the S&P 500 that only a handful of companies account for? We only have about 30 seconds.
Well, I mean, you always have that to some extent, but if you think about it, what's striking here is that you're talking about 40% of the move across 1,000 points.
Right.
And those 5 companies don't have that much weight. It's closer to like 25%.
Which is still a lot.
So they are, pulling beyond their weight, and they've already got a whole lot of weight to begin with.
Yeah, interesting. Good stuff always, because it's something we talk about a lot. But I do find it interesting how everybody's like, okay, their time is over. It's time to go to other names. Here they are once again, being all the momentum between those key levels, Tim.
All right, well, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nancy.
Hey, Tim. Minneapolis Police Chief Madaria Arradondo explained police procedures today in the trial of former Minneapolis police officer Derek Chauvin on trial in the death of George Floyd. He explained how all officers in his department receive extensive training every year on CPR and crisis intervention tactics. Earlier today, the ER doctor who pronounced Floyd dead says he likely died because of a lack of oxygen, not a heart attack or drug overdose. Well, the White House was forced to scratch the annual White House Easter roll for the second straight year due to the coronavirus pandemic, but President Biden offered a short Easter message today of hope.
We look forward to next year when the White House will ring with joy of the season once again, and there'll be an Easter egg roll, God willing.
The event, typically held the day after Easter, usually brings 30,000 children and parents to the White House. This year, instead, they sent out thousands of commemorative Easter egg roll eggs to vaccination sites and local hospitals. Hoping to avoid a catastrophic flood, crews are pumping water out of a leaking reservoir in an old phosphate plant near Bradenton, Florida. But that contaminated water is being pumped into the Tampa Bay, which could harm marine life. Manatee County Administrator Scott Hope says residents need to leave the area until the all-clear has been given.
If all those flows continue, we will be at a situation where we will no longer have that risk of that full breach would send that 20-foot wall of water across.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic on this Monday, a gorgeous Monday, might I add.
Are you doing this from the beach?
In New York City. No, I'm not.
You're not? You are not joining remotely from the beach.
There's a new word, everyone, that you might be hearing more about, which is what Tim is kind of alluding to.
It's bleisure. It's not a word that I had heard before reading this column by our very own Connor Sen. Work moves to the beach as bleisure time catches on. The pandemic has taught us to be more flexible in what we think of as the office, paving the way for longer vacations with the family.
Right. So the combination of business leisure, right? I guess that's what we're talking about.
Yeah.
Doing work, but you're kind of also doing it in a nice place. Could be the beach. I mean, this all gets to, you know, it's funny. I was listening to Taylor Riggs earlier on radio. She was subbing in with Paul Sweeney, and she said she found it really kind of funny that she's waiting to get on a plane, and they were like 6 feet apart, social distancing, and then you get on plane, and you're like right next to somebody.
That's really
but she said the planes were packed. And we do know that tourism is up in a big way. It's the business traveler that's not necessarily coming back so quickly.
Yeah, that's right. And something that we explored last week in a Bloomberg Live event called Work Shifting, all focused on the future of work. And one thing that a lot of these executives we spoke to talked about was this sort of hybrid approach to what happens on the other side of the pandemic. And as Connor writes, quote, rather than a wholesale return to 5 days a week in the office or a fully remote workplace, companies are more likely to settle on hybrid models, though what constitutes hybrid will be different from company to company. Moving to Florida to work remotely for New York City or California-based company might be a solution for some, but not others.
Right. And when they talk about summer in particular, might be a time when we see bigger changes in work-life balance. You know, schools are out, the office often moves at a slower pace, and workers are taking vacation with families. So rather than having to take time off to go to the beach or visit relatives, a greater acceptance of remote work makes a different type of summer travel possible. So maybe you're working outside the office for 2 or 3 weeks from a scenic destination on the water or in the mountains. This is what we might see. We'll have to see.
It all depends on who you work for, where you work, and what kind of job you do.
That is so true. Stay tuned again for how this maybe plays out this summer. You're listening to Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all pushing higher. Stocks are holding on to gains. The Dow and the S&P both trading at records. Stocks rallied after solid economic data added to evidence the recovery is gaining momentum. Most major groups in the S&P 500 are higher, with that index extending gains into a third session. The NASDAQ 100 index up by 2%, Russell 2000 up by 0.4%. S&P up 59, a gain of 1.5%. The Dow's up 392, up by 1.2%. Close to session highs right now. NASDAQ up 225, up 1.7%. 10-year yield 1.71%. Gold lower a little change, down 70 cents the ounce at $17.28. And West Texas Intermediate crude down 4.5%, $58.70 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, it's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we're taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's Denise Pellegrini.
There's never been a year like this for workers. Millions told by employers to stay away from the office, and some downtown neighborhoods nearly deserted. Now, with the vaccine going into people's arms, bosses, including Jamie Dimon of J.P. Morgan Chase, want workers back ASAP.
It's very hard to build and develop and deepen a relationship on the Zoom world.
But Gil Barak, U.S. CEO at Colliers International, says desk sharing and open office spaces are out.
That's probably not a good idea to be so close to each other without some kind of plexiglass separation.
Kent Swig, president of real estate company Swig Equity, says other changes are coming too.
Taking our temperatures going in during flu season, I think, is going to be part of everyday life.
And Nicholas Bloom, economics professor at Stanford, says after this year like no other for many workers, work from home for many white-collar workers is here to stay.
Something like 3 days a week in the office where the whole team comes in, you work together, and 2 days a week at home.
Denise Pellegrini, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everyone, as you've been hearing, risk on trade, no doubt about it. We've got equities, those major equity averages just coming off their best levels of the session, but nonetheless up more than 1% on the Dow, the S&P 500, and the NASDAQ. Let's get to it with Prabha Ram. She is portfolio manager at American Century Investments. They have $220 billion in assets under management. Her fund, though, is about $28 billion. She helps manage it. It's the American Century Focused Dynamic Growth Fund. Check it out because it's up 96% in the past 12 months, has returned on average more than 28% annually over the past 5 years, putting it in the 98th percentile according to Bloomberg data. She's back with us on the phone in New York City. Prabha, good to have you here with us. Dave Wilson was just talking about some of those big tech names that have once again propelled us, the Fab Five, whether it's Facebook, Amazon, and the like, propelling us to another record on the S&P 500. How do you see the market, especially when it comes to some of those more innovative companies and those faster growing companies?
Yeah, thank you, Carol, for having me. And, here's what we see, right? So obviously the innovative companies have just an enormous track record, right? So if you just forget today, but if you can look back in the last decade, 2011 through 2020, the tech winners, if you take the top 10 tech winners, they actually doubled their margins. And if you look at their cash flow return on investments, that went from 14 times to 21 times. So obviously, these names continue to gain momentum because, they've proven their success, the success of their business models, not just the high growth and the net worth effects, but also the profitability that comes with it. And so they've gained some of the mojo, if you will, that that has accrued to them. But as a growth investor, I'm not. Today is a good day, and so we'll take them as they come.
Yeah, Tesla is the top holding in the fund, 8% of the fund's holdings. Tesla up 4.5% today on those good delivery figures. Given that Tesla has grown to be such a large portion of the fund, do you consider trimming it at all? Have you done that?
Yes. So Tim, we have a very disciplined approach to risk management. In fact, the firm American Century, among institutional investors, is known for its risk management chops. Over and above the stock picking, which is what we do. So basically, we have limits on what % of active risk one security can be. So we don't get carried away, even though there are huge addressable markets and the company is executing. So yes, we have, to answer your question directly, we have trimmed Tesla multiple times just because it has gotten big. We still believe in the innovation story. We still believe that electric vehicles are the future, and Tesla has an incredible lead. We've talked about it in the past. Not just in terms of getting the electric vehicles, but having battery production at scale, and just innovating on design over and over again, and also having the data to back it up with 1 billion real-world miles. So we are excited about the company, but do watch our weights because the risk management aspects of it confine us to a certain % of active risk for any one particular security.
Right, so it has to do with exposure. Hey, talk about some of the names that you like. Chegg, CHGG is the ticker, and this is an online educational platform. Tell us about this one and why you like it. I mean, the PE is more than 800, is that right?
Yes, so, and again, Carol, I would, advise you on some of these names to look at how early in the growth cycle these names are versus the addressable market. So just to give you, most of us that have children at home, that have been, quote unquote, homeschooling with a Zoom education can relate to this. So what Chegg is a direct to student. It's an online on-demand education platform where, their objective, they call it, is to master and advance. And this, I'm going to quote the CEO, Don Rosenzweig, on this, and he says, getting students unstuck. I'm sure we can all relate to getting stuck on a platform, right? So this is one we like quite a bit because if you look at the statistics here, it's actually staggeringly depressing, unfortunately, because let me give you a few numbers here. The average college student is not your, bushy-eyed 18-year-old, but is actually 25 years old. 1 in 4 of them has a child. 40% are already employed as they're trying to get a college degree. In fact, if you look at the profile of an average online student, it's a 30-year woman juggling an education, a job, and a child. So these people need help. And if you look at the cost of a college education, I don't have to tell you this, 1.6 in student debt that needs to be repaid. So this is where Chegg comes in because what it is an online on-demand platform. So, and basically what they have is this massive database of questions, that have been answered by experts in a step-by-step fashion. And typically in STEM, that's 60% of their business. They do have other, other subjects as well.
Okay.
So if you think about it, that's massive network effects, right?
Right.
53 million and of that, a quarter of them coming from outside the U.S. as well. So,
all right.
Yeah.
Prabha, we've got to run. Next time we'll leave some more time, though, because I know you've got other names. That stock was on quite a tear last year, up about 138%. Prabha Ram, co-portfolio manager at American Century Investments, joining us. The close coming your way in a moment.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange. Folks from Wall Street bound ringing that closing bell. Records for the Dow, a record for the S&P, a move higher for NASDAQ. S&P at the close up 57 points, up 1.4%. The Dow up 372, up 1.1%. NASDAQ rallied 225 points, up 1.7%. NASDAQ 100 index up today by 2%. 10-year yield 1.70%. Gold lower a little change, down 55 cents the ounce to $17.28. West Texas Intermediate crude down 4.4%, 58.76 a barrel on WTI. So again, records for both the Dow and the S&P 500 index. Tesla shares rallied after blowout delivery numbers from the electric vehicle maker. Tesla up today by 4.3%. Prabha Ram is portfolio manager at American Century Investments. Moments ago, right here on Bloomberg Business Week, she told us she likes the stock, but says they've been scaling back their position because of risk management considerations.
We have trimmed Tesla multiple times just because it has gotten big. We still believe in the innovation story. We still believe that electric vehicles are the future, and Tesla has an incredible lead. We've talked about it in the past.
And again, Tesla shares up 4.4% among some of the other EV makers today. Nikola Corp lower today by 7.8%. And shares today of Lordstown Motors uses the ticker RIDE, R-I-D-E, down by 4%. Facebook shares advanced to a record today. Facebook up 3.4% among some of the other FANG names. Apple up 2.3%. Amazon up 2.1%. Netflix up 0.2%. Alphabet up 4.1%. Recapping, S&P up 1.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
All right, everybody, time to take a little bit more of a deeper dive into today's trade. Of course, Charlie breaking down those closing numbers on Wall Street, and the S&P 500 overwhelmingly, you saw more of the index members gaining ground. And I mean, Tim, if we break it down by industry groups, you saw that almost, I think it was 10 of the 11, right, were higher today.
That's exactly right. The only one that wasn't was energy. It's the only laggard. Well, I should say the biggest laggard, the only one in the red today, down 2.41%. But on the other side of that, consumer discretionary higher by 2.3%, communication services higher by 2.3%, information technology up 2%, consumer staples up 1.3%.
All right, so let's bring in Bloomberg News cross-asset reporter Katie Greifeld, keeping a watch as well on the markets today. Green across the screen today, Katie. It definitely felt like, you know, equity investors, they finally got a moment to react to that strong Friday jobs report, and they were all in.
Yeah, such a tricky end of the week last week, having the stock market closed on, you know, what was a very hot jobs print. I mean, so far above analyst expectations, 900,000 jobs added in March. I mean, this was the equity market's first real, time that they had to react to that. And you saw it, I mean, trickle through the entire stock market. S&P 500, tech, small caps up, everything was green today. And it was interesting that you did see the bond sell-off cool a little bit. I will note that the bond market futures were open on Friday, so that market had a chance to digest that. But even still, I mean, yields are super high relative to recent history, and stock bulls have just found a way to live with that.
We'll talk a little bit about that, Katie, because it does seem like over the past few months when we have seen yields rise, especially on that 10-year, there is a sell-off when it comes to tech stocks or those high-growth stocks. How have investors learned to live with those higher yields?
I will say stock bulls will find a reason to be bullish in almost any situation. And the reasoning I'm hearing from people who are still bullish on stocks right now is that yields are rising for so-called the right reasons, which means that you have a very strong U.S. growth outlook right now. I mean, expectations are that the economy is going to boom in the second half of the year.
This is good.
This is good.
This is what everybody's been saying, right, Katie, that we were going to see this recovery later on.
Yes, good news is good news. And when you get strong reports like the jobs report, and then we had very strong ISM service numbers today, you tend to see, the bond market and the stock market, they're moving off that same data point that is suggesting that actually the U.S. economic outlook, it's really good right now.
Yeah, exactly. I love, Joe Weisenthal has written some really smart stuff on this too, and just talking to guests that, in terms of what we're seeing, the yield curve and how quickly it moved up, it's because all of a sudden we went from the world was still falling apart in January to all of a sudden here we are in April. There's a lot of stimulus money. We're seeing the labor market come back. And so the bond market has caught up with that pretty quickly.
Exactly. And that's the message that I'm hearing from analysts and investors I speak to, is that when you have such a dramatic repricing of the outlook, you would expect to see bonds really sell off. And that's what we saw. The JP Morgan Forecast Revision Index, this is an index I stumbled across in the last week. It basically shows how much economic forecasts change in a quarter. Last quarter was its biggest upward move in history. So it makes sense if you take that into account that bonds would sell off, and I know we saw measures that this was the worst quarter for bonds since 1980, but if you're having a historic repricing of the growth outlook, that makes a little bit more sense.
Okay, Katie, you're also keeping an eye on some stuff that's happening when it comes to foreign exchange.
Yes.
What's going on there?
Well, I used to be a currency reporter full-time, so this is my sweet spot. But it's interesting that the dollar has really hung in there. And let's rewind back to the start of 2021. The call was that this was going to be the demise of the U.S. dollar, that you were going to get all this fiscal stimulus. It was going to debase the currency, and that has just not happened.
Money printer go bird.
Pretty much, that Powell is going to come in there and just devalue the dollar, but that hasn't happened. The dollar's been hanging in tough, and you actually saw Goldman at the end of last week. They ended their short dollar call, which they've been holding for 6 months, and their reasoning was what we've been talking about, that U.S. growth, the outlook there is really strong relative to the rest of the world, and that's what FX moves on. It's all about the relative growth expectations, and the rest of the world is just not where the U.S. is in terms of the growth outlook and the vaccine rollout.
Right, we've seen the IMF talking about that, right? Comparisons between the developed and developing world. We know China's its own story, but you are seeing a real divergence between which countries, which economies are getting back on track. And it tends to be some of the more developed areas, although not necessarily the case when it comes to Europe. But nonetheless, we're seeing a division.
Yeah, and FX, I love it because it's a very zero-sum world. You have one currency going up, one currency going down. And in this case, if you look at the euro-dollar comparison rate, Europe's still struggling to get out of lockdown in a lot of important regions, and that's weighing on those currencies.
All right, Katie Greifeld, so appreciate it. Bloomberg News cross-asset reporter. All right, over to Dave Wilson we go with a check on the stock of the day. Dave, what do you got?
Blue Green Vacations Holding, Carol. It's a company that's been through some changes over the years. Started out as BFC Financial, then bought timeshare marketer Blue Green Vacations in 2013, and changed its name to BBX Capital after a 2017 merger. The current name was adopted last year after BBX spun off all its investments except for a 93% stake in Blue Green Vacations. Now, Blue Green Holdings ticker is BVH. The shares dropped in March of last year to their lowest price since 2012. Since then, they've risen more than fourfold. The rebound accelerated after Blue Green Holding said it would merge with the timeshare unit, whose shares trade separately under the ticker BXG. Now, this all-stock deal is valued at $48.4 million. Blue Green Holding said the combination will be what's called a short-form merger under the laws of its home state of Florida. That means it won't need board or shareholder approval. That said, investors really showed their approval. Blue Green Holding rose to its highest price since May 2019 and closed with a gain of almost 19%. Contrast that with Blue Green Vacations, which was down 0.5%.
Although it's up a lot this year, but that's just the bounce back, right?
Yeah, absolutely. And if you look at Blue Green Holding even now, it's a lot smaller than Blue Green Vacations based on market value. That gap's starting to close with the help of this deal.
All right. Dave Wilson, much appreciated. Dave Wilson with the stock of the day. Tim Stenemick, you have a good evening.
Thanks, you too. I'll see you tomorrow.
All right, see you later. All right, let's get a check on world and national news. Over to Nancy Lyons we go. Hey, Nancy.
Hey, Carol. Well, the trial of former Minneapolis police officer Derek Chauvin in George Floyd's death started out today With a focus on the medical side of the incident, Dr. Bradford Langenfeld was the ER physician who tried to save Floyd's life. He was questioned by prosecutor Jerry Blackwell about what the paramedics reported as they arrived at the hospital.
Did they say to you, for purposes of caring or giving treatment to Mr. Floyd, that they felt he had suffered a drug overdose?
Not in the information they gave, no.
Did they tell you in the information they gave that they felt that Mr. Floyd had had a heart attack?
No.
Langenfeld says Floyd arrived at the hospital in full cardiac arrest. Defense attorneys have argued that it's possible that Floyd's death may have been caused by drugs. Arkansas's governor has vetoed legislation that would have made his state the first to ban gender-confirming treatments for transgender youth. Republican Governor Asa Hutchinson rejected the measure that prohibits doctors from providing gender-confirming hormone treatment or surgery to minors or from referring them to other providers for treatment. Hutchinson's veto can be overridden by a simple majority of the legislature. And former Hollywood producer Harvey Weinstein today asked a New York State appeals court to toss out his sexual assault conviction, arguing he was denied a fair trial. The 166-page appeal claims the judge should not have permitted testimony from 4 women whose sexual allegations had not resulted in criminal charges. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week, and I'm Carol Masser, and joining me right now is Charlie Pellet of Bloomberg News. What did you do last week?
I basically took time off and did virtually nothing.
Oh, so a staycation.
Exactly. You know, you got to take time just to, unwind.
I'm totally into that. A little meditation, a little quiet moments.
Yeah, you can see me doing that, right?
Yeah, your little meditation pillow. I totally can see a little incense in the background. Yeah, that's not happening. Okay, so this story about Alex Tanzi, Charlie, is about Americans bringing forward their retirement plans because of COVID. Listen, COVID is impacting and has impacted Americans' finances in a big way.
Indeed, more than 3.1 million Americans aged 55 or older plan to apply for Social Security benefits earlier than they once thought because of the pandemic. That's according to the Census Bureau. Interesting, though, because that's offset by 1.4 million people in the same age group, the boomers, who anticipate working longer due to the impact of COVID-19, according to the Bureau's latest Household Plus survey conducted between March 3rd and March 15th.
I love this story. It's kind of like, this is happening, but wait, but there's also this. The upshot is a net 1.7 million early retirements, which, as we know, Charlie, we talk often about people who stay in jobs to an older age, and that kind of pushes out some of the younger workers from kind of moving up the corporate ladder or getting a job in the first place. So what this means is there's a net 1.7 million early retirements, which will likely mean more positions opening up for younger Americans. Older workers, the so-called baby boomers, born after World War II, those 2 decades after World War II, have accounted for essentially all of the more than 17 million jobs created in the U.S. since 2000.
Indeed, and these numbers especially true in the New York metro area. A net 300,000 people expect to apply earlier for Social Security, according to the census numbers in our story. The closest, by the way, to New York was Philadelphia, where a net 85,000 people are planning early retirement.
No meditation at all?
Not on the job.
And never on the job, that's for sure. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. A record day for the Dow and the S&P 500 index after solid economic data added to evidence the recovery is gaining momentum. Traders pushed up the value of stocks after data highlighted an economic pickup as more Americans are vaccinated against the coronavirus, restrictions are rolled back, and fiscal relief takes hold. S&P up 58, a gain of 1.4%. S&P at a record 4,077. The Dow up 373 points, up 1.1%. NASDAQ up 225, a gain of 1.7%. 10-year yield 1.71%. Gold little change, down $1 the ounce at $17.27. Crude down 4.3%. West Texas Intermediate crude 58.78 a barrel. Cannot ignore the NASDAQ 100 index today, up by 2%. So a record for the Dow year to date, now up by 9.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. So we want to get to a couple of stories written by our own Bloomberg Businessweek economics editor, Peter Coy. One is among the most read on the Bloomberg. It's about how the SALT deduction, around state and local taxes, isn't just a subsidy to high-tax blue states. It's a really smart rate. And he also talks about the labor market, the U.S. labor market, and how there's a lot of competition going on, especially for small businesses who are looking to hire workers. So let's get to it. Peter Coy on the phone from New Jersey. Peter, nice to have you here. So let's start with the story that talks about how some workers are being offered signing bonuses and pizza to come work.
Yeah.
What's going on?
It is surprising, but I came across a company, Sierra Pacific, out in the West Coast. I talked to one of their people who said, they're paying signing bonuses of up to $1,500 at factories in California, Wisconsin, state of Washington. I talked to a jewelry maker in Burkesville, Kentucky, a very small business. She laid off 3 full-time employees last year when COVID hit, and then she tried to hire them back, and they didn't want to come back. So they were happy, drawing unemployment compensation. And if you want statistics, well, the obvious one is last week, the National Federation of Independent Business, which represents small business, reported that in March, the share of its people surveyed who said that they could not fill some of their jobs was the highest ever in records going back to 1974.
Wow.
Yes.
So what's are people right about that? Listen, you've got unemployment benefits. They're not too shabby. Why go to work? Is that what it's all about, or there's a lot more going on here?
That is one thing. I'm pretty sure that's one thing. And people told me that, that's what they're actually hearing from some of the workers. And so it cannot be ignored, and it's certainly an important factor. It's not the only factor. Another one is just continuing fear of COVID. Especially in a customer-facing job, people just may not feel comfortable. Another is schools that are still closed, and so parents have to stay home with their kids. I think there's also, I talked to one woman in California who said that, when you've been out of work for a long time, sometimes it's hard to get your gumption back. She said it's just asking an energy level that people haven't had in a while. She found that some of the employers in her area are cutting what used to be full-time jobs into part-time jobs, breaking them up because people don't want a full-time job.
Well, the other thing, too, is I always think about the other side of it, like corporations. Are they just asking for too much? Are they being too picky? There's been this, a conversation, I feel like, for several years now that employers have to take on workers and train them.
Yes. Carol, I'm glad you brought that up because that's another thing I got into in the story. For sure. There's a mismatch of the skills that the available workers have and the ones that employers need. And it's gotten worse because of the pandemic, because it's sort of changed the nature of work. As we know, a lot of us are working from home, and that may continue even after the pandemic's over. So jobs that are related to digitization, so that would be artificial intelligence, machine learning, data analysis, security, network engineering, all these things. I spoke to one from General Assembly chief executive officer there, Lisa Levin, who said that. So that means we need to train up a new generation. Some of that's going to happen through the companies like hers, through community colleges, but some needs to be done by employers. So yes, to get back to your point, I do believe that employers need to take on more of the responsibility for taking people who may not fit every jot and tittle of their requirements, but could become useful employees.
Yeah, because I wonder if it's tough now. We still have a ways to go to get back to where we were. So, I can only imagine what it's going to be like maybe later this year.
Well, yeah, the Bloomberg, of course, surveys economists about their expectations for various economic metrics, including the unemployment rate, and they're predicting that the unemployment rate in the quarter a year from now, second quarter of 2022, will be just 4.5% versus 6% now. So if there's a problem now, imagine how much worse it's going to be in a year.
Yeah, exactly. Hey, listen, just got about a minute or so left here.
Yeah.
You got to address this story that is among the most read on the Bloomberg about the SALT deduction, not just a subsidy to high tax blue states. I love this story, and it really explains why it's not just a tax break for those of us living on the coast. There's more to it.
For sure. I mean, why does this provision exist in the first place? It's because we don't want double taxation, and if you've already paid taxes on, say, local income taxes, that income's gone. How can the federal government, tax you that as well? And then you get into the fact that a lot of the states that are hit by this tend to be ones that blue states. So that was one of the probably part of the motivation for the Trump administration getting rid of that or limiting that provision was a knock on the blue states. A lot of the people probably listening to this program now are hit by this limitation, $10,000 cap on SALT deductions. It's true that having tax competition between states can stop states from boondoggle projects and the like. But on the other hand, the states we're talking about, I think they've gotten rid of a lot of those boondoggles. They're hurting right now, and they need some help.
But listen, I highly recommend everyone check it out, and I'll put it out on Twitter, but you also talk about that the benefits of the high tax states, higher spending are shared by people in low tax states, and you talk about the safety net for the poor. There's a bigger picture going on. Peter Coy, great stuff as always. Great to hear your voice. Peter Coy, economics editor at Bloomberg Business Week, on the phone from New Jersey. Just want to point out, crossing the Bloomberg Terminal, Credit Suisse's investment bank chief, Brian Shin, is leaving the firm following that Archegos loss. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And you are listening to Bloomberg Business Week. Carol Masser right here on Bloomberg Radio. Coming up, we're going to talk a little bit about venture capital and ideas beyond those often sought after by Silicon Valley and Silicon Alley. We'll get into it with the founding partner and CEO at Relevance Ventures, Cameron Newton, who's back with us. First up, though, let's get another check on the trading day and your top business stories. Let's check in with Charlie Bellett.
Thank you very much. Here's what's going on. Credit Suisse Group's investment bank chief, Brian Chin, is leaving the firm as part of a wider shakeup at the Zurich-based lender that was hard hit by the collapse of Archegos Capital Management. One sports note to pass along from the Bloomberg: the Jets have traded quarterback Sam Darnold to the Panthers for 3 draft picks. Stocks rallied to a record after solid economic data added to evidence the recovery is gaining momentum. The dollar fell, treasuries little changed, oil sank. Let's begin with crude. West Texas Intermediate down 4.4%, 58.77 a barrel. Gold down less than 0.1%, down by about $1 an ounce to $17.27. 10-year yield 1.70%. S&P 500 index up 58 points, a gain of 1.4%. The Dow up 373, up 1.1%. Nasdaq up 225, a gain of 1.7%. Against the backdrop of President Biden's infrastructure plan, one area of concern for investors is the outlook for inflation. Dana Peterson is chief economist at the Conference Board. A little bit of difficulty there playing Dana Peterson for you. Some of the other stories that we're following: Norwegian Cruise Lines Holdings plans to start cruising from U.S. ports on July 4th with fully vaccinated guests and crew, potentially ending a hiatus from such voyages that began in March 2020. It is unclear if the government will go along with the timeline. Norwegian says it will start at just 60% capacity and boost capacity by 20% every 30 days. Today, we did see the cruise line stocks advancing today. All three of the major cruise line companies that we follow for you here at Bloomberg: Norwegian Cruise Lines up 7.2%, Carnival Corp up by 4.1%, Royal Caribbean up by 2.9%. And that's a Bloomberg Business Flash.
It's 70 degrees. Dana Peterson is outside having lunch or an afternoon snack, Charlie.
And who can blame her?
I don't. Totally. All right, Charlie, thank you so much. Listen, folks, we have talked a lot in the past year about the renewed, dare I say, or really new real emphasis on things like health and wellness in all of its forms. Investors really committing a lot of money to the area. Just recently, you might recall, we mentioned that Blackstone Group leading a $100 million funding round in on-demand mental health company Ginger. So back with us to talk about VC investments in things like health and wellness and those beyond those traditional areas often sought out by Silicon Valley and Silicon Alley is Cameron Newton, founding partner and CEO at Relevance Ventures, back with us on the phone from Nashville, Tennessee. Cameron, how are you?
I'm doing great, Carol. Thanks for having me back on.
Well, it's nice to have you back. Before we get into some of your thoughts about what's going on in VC and investing, how's Nashville?
Nashville's great. We've had a couple of days of really good weather here after having, there was some flooding and so forth, which was unfortunate. But we've come out of that, and, it's a great place to be. I often get asked why I chose to locate in Nashville, and, it's a really easy answer. It's a business-friendly area, business-friendly state, no state income tax. And probably one little-known fact about Nashville to most in the country is within a 600-mile radius is, over 50% of the U.S. population. So from a geographic perspective, it's an ideal location.
It's a win-win. It's one place I have not been in the country, and I'm dying to go for so many different reasons. It's interesting. You brought up no state income tax, and tax policy definitely shapes what companies do, what individuals do. What do you think about some of the initiatives that the Biden administration are talking about, especially when it comes to corporate income tax?
Well, I tend to stay out of the discussion about the taxes at the federal level. I think when you get granular on it, though, it certainly affects emerging ecosystems in the venture space. I would consider Tennessee and Nashville to be, very business friendly, with a public policy geared towards a business friendly environment. And that's encouraging businesses to move to Tennessee. That's encouraging entrepreneurs to leave other areas that perhaps have public policy arrangements or tax arrangements that are not as compelling. And I think that that's lending to this kind of rise of the rest that you're seeing throughout the country, where you're having entrepreneurship and the entrepreneurial spirit just rage in areas that, you know, are not historically areas where you would see companies being started at, including the Southeast and Midwest.
Well, okay, so interesting. And I do wonder, as you see, you know, some of these new companies that are ultimately being started, I mean, I know you guys are looking for things that are different when it comes to investing in the VC world. What in particular? I know we've talked with you about health and wellness. What more are you seeing on that front?
Well, I think you mentioned earlier in your comments about the ginger round in the mental health space. So we're very bullish on the mental health space. We have two investments in that space, one on the health system side and one on the outpatient side. One we just did in January, actually in New York, a company called Talkiatry, which is really bringing, you know, mental health services to the masses. You know, it's an industry that has historically been kind of anchored by a cash pay system and somewhat of a taboo. People didn't want their insurance companies to know they were going to seek, you know, someone to talk to, and I think that is falling away. And I think insurance companies now are engaging, and I think it's a prime time for that space. I think you're just going to continue to see massive growth.
Yeah, when you look at your health and wellness, we've talked about some of it. Sunbasket, you mentioned Crew, Diet ID, the Good Patch. What is it that guides you in terms of, you know, where you want to commit money? What is it that you're looking for?
Yeah, that's a good question. So, you know, Carol, we're a Native American-owned venture fund, and so that's who we are. It doesn't necessarily define us, but that's who we are. Our investing ethos is really anchored around this philosophy of harmony, which is certainly derived from our heritage. And harmony at its basic level really is increasing the connection of oneself to community, family, and nature, while providing a balance of kind of mind, body, and spirit. And so how do you take that and overlay it in the health and wellness space and look for companies that kind of meet or fulfill those criteria? So for us, it's really seeking out companies that reduce the reliance on the traditional healthcare system, which in our view really is geared toward treating symptoms. It doesn't really get to the root cause a lot of times of people's deficiencies or illnesses. And so as we look across the space, we look for companies that are doing just that. It really kind of falls in that preventative care space. So self-fulfillment, self-help, food is medicine, food lifestyle is medicine. All of those things kind of go in and into what we look for in that particular space.
Yeah, certainly mirrors a conversation we had last week that was about this whole idea of not getting to the point where you're so stressed out that your physical well-being is coming undone. The point is, you know, preventing yourself from getting there and finding the tools to do that. Hey, Cameron, sit tight for a second. Got to do a little bit of news, but we'll come back and continue with you. Cameron Newton, founding partner and CEO at Relevance Ventures, on the phone from Nashville, Tennessee. In the meantime, let's get to that world of national news. Nancy Lyons in our DC studio. Hey, Nance.
Hey, Carol. The Minneapolis police chief says former officer Derek Chauvin absolutely violated department policies when he had his knee on George Floyd for over 9 minutes.
Once Mr. Floyd had stopped resisting, and certainly once he was in distress and trying to verbalize that should have stopped.
Chief Medaria Arredondo also testified today officers have a duty to care for someone in their custody. Arredondo also said Floyd's alleged use of a suspected counterfeit $20 bill at a convenience store would not normally lead to someone being arrested. U.S. Treasury Secretary Janet Yellen, in her first speech on international economic policy, is pushing for a minimum corporate tax rate.
Together, we can use a global minimum tax to make sure the global economy thrives based on a more level playing field in the taxation of multinational corporations and spurs innovation, growth, and prosperity.
Yellen spoke ahead of the spring meetings of the International Monetary Fund and the World Bank. The Supreme Court is giving Google a big win in its dispute with Oracle. The case involved a copyright dispute over software in the Android mobile operating system. Oracle had sued Google over thousands of lines of code that Google used to construct Android. The Supreme Court overturned a lower court order and said Google's use of the code is protected under a copyright doctrine involving fair use. Oracle responded by saying Google's behavior is why regulatory authorities around the world are looking at the company's business practices. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, our team has been talking about this, and I think, Charlie, you mentioned it as well. Some of those cruise line stocks, they have been on quite a tear. I think Norwegian was up about 7% today. Carnival also rallied. I mean, the cruise industry, this is one that has been, it's just taken, Charlie, a longer time to get back up and running.
Indeed. Full disclosure, do I really need to disclose that I love getting on cruise ships? I love going on cruises.
It's a known fact.
But it's a dilemma. Do you want to get back on a cruise ship? Now, Norwegian leading the charge today, saying it will start at just 60% capacity, boost capacity by 20% every 30 days. It also is urging the CDC to lift an order preventing such voyages from occurring for the time being, but it also says anybody who comes on board has to be fully vaccinated to get on the ship, passengers and crew.
Like the CDC, for anybody who's been tracking the cruise industry, they have had this phased-in approach in their conditional sailing order. So they've been laying out things as we go along, and the CDC has come out and said that they declined to guarantee that Norwegian can stick to the timeline that they're laying out. But I do wonder, Charlie, if this could be ultimately the game changer, that if you're vaccinated, you can get on board ship, because otherwise it's like, how do you manage it?
And that then brings me back to a Bloomberg Business Week story that was either 1 week or 2 weeks ago. How do you prove it? Well, we all got those handy cards when we got vaccinated.
Little flimsy, those cards.
There you go. And is your card real? Is my card not real? If I got a vaccine in Canada and I'm traveling on an American ship, if I got my vaccine overseas, who says I'm okay to travel?
No, it's a really, really good point. What will you wait for to get back on a ship, Charlie?
As I knew you were going to ask that question, and I looked at this, I am so tempted. I think we've got to let a whole bunch of these cruises go out at 100% with no issues. The cruise industry was front and center when all of this unfolded roughly a year ago. A lot of unwanted attention. Sadly, I'm going to have to wait a lot longer.
Yeah, exactly. Listen, you got to be, safe, because we know that there's those cruise ships, a lot of people in a relatively small space. All right, Charlie, thank you so much. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. SoftBank nearing a deal to take a 40% stake in Norway's auto store, that according to Dow Jones. Stocks rallied to records today after solid economic data added to evidence the recovery is gaining momentum. S&P up 58 to a record 4,077, up 1.4%. The Dow up 373, up 1.1%. NASDAQ up 225, up 1.7%. 10-year yield 1.70%. Gold little change, down 72 cents the ounce at $17.28. West Texas Intermediate crude down 4.3%, $58.78 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, let's get back to our discussion. Still with us is Cameron Newton, founding partner and CEO over at Relevance Ventures. Still with us on the phone from Nashville, Tennessee. Hey, Cameron, I'm curious too. Health wellness is certainly an area. FinTech is another area that you guys are in. What's your typical hold time for a company? And I'm just curious about exit strategies right now, or if you're looking to do it in this market environment.
Yeah, well, for us, we are Series A and Series B investors, so we're not the first check in. The first check, your seed and pre-seed rounds are typically 8 to 12-year holds. That's on average what we experienced. For us, we're really investing in companies with an eye to look to liquidation somewhere between 3 and 5 years. Sometimes it runs longer, sometimes it doesn't. I think what has emerged in the market is just this massive amount of money in the later stage VC or private equity world, which has been buttressed by your corporate VC arms and also your sovereign wealth funds. And so there is an attractive option for early investors to actually sell secondary shares into larger later stage VC rounds. I think everyone's watching the SPAC market too right now. Everyone's kind of watching the IPO market. It feels that things are a little tighter, but deals are still getting done for good companies. And I think at the end of the day, that's really the important point, right? These de novo companies with 5 years of projections and everything happening in year 5, probably are not going to be getting access to the market as easy as they did, 3-4 months ago. But I do think for good companies that have real revenue, real cash flow, and in good positions in their respective markets, that market will remain open.
So you're looking to do exits this year, next few months?
I'm looking to do exits every year, Carol.
Oh, you're not going to give me anything more, are you?
Well, if I could wave my magic wand and do it without getting in trouble, I would certainly share. But yes, I think that there's going to be an attractive market for exits this year. Even it'll be a little bit tighter, I think, in the public markets, the IPO and SPAC market especially, and not so much on the SPAC side, but probably on the pipe side of the equation. It's going to get a little tighter, more competitive.
Why do you say that on the pipe side?
Well, look, you've all read the stats about how many SPACs have been formed, how many billions of dollars are in the SPACs. Well, because of the mechanics of a SPAC, you really need a quality pipe to come in beside your SPAC investment. And so, it's one thing to go raise money as a blank check company. It's another thing to go to the market, to the real money managers of the world, and say, here, evaluate these 100 SPACs. Which one do you want to put your money in? And so it's just becoming a more competitive situation.
Yeah, we have actually a great story in the Bloomberg. It's among our most read. Some 300 SPACs debuted in the first quarter of this year, creating an oversupply with at least 302 that hadn't bought anything yet and were trading for less than the cash raised in their public offering. They're also facing an eventual deadline to liquidate if they don't come up with a deal. I mean, there feels like a lot of money sloshing around looking for something.
You got it. There is.
Well, no, go ahead, please.
Oh, I was just going to say, on the SPAC side of the equation, I think there's ample people that would want to talk to you, and really any size company, which is probably not the best scenario. But I think the ones that are real, the real companies with real size and real market positions, real revenue and real earnings, I think they'll still continue to get it done.
Is it driving up, though, some of the funding rounds because of this, because of all the money that's around?
Well, it's interesting. We haven't really experienced that. So there's in our experience, there's really a bifurcation in the market. There's the SPAC market and the IPO market, and then there's the kind of later stage PE and venture funding rounds. And there's a considerable gap, I think, still between the valuations there. I think that is starting to close. So I think over time you'll see that fall more in line, and that anomaly will no longer kind of exist. It's certainly not in the way it does now.
You know, when you talked about health and wellness, because I do feel like, you know, Cameron, that there was, and I know we've talked about this a little bit before, there really feels like there has been a gut change when it comes to health. It's not just about our physical well-being, but it really is about our mental well-being. And I feel like it was such a taboo subject, has been for years, but it's, you know, even as we've evolved, it still felt like nobody talked about it. This year, we kind of ripped the Band-Aid off. What are you seeing in terms of the investments that you've made, where just the metrics at some of these companies that you're investing in, where you're seeing it's really taking off?
Yeah, I would say that particular space, especially on the telehealth side, so delivery of psychiatric services via telehealth, is just red hot. And so, you just see a lot of interest in the space. You know, we invested in Talkiatry earlier this year, I believe in January. That's a New York-based business. We've already onboarded 30 providers, which was, you know, our target for the year, and we've already onboarded that many providers, and that has led to an immense amount of interest in the VC community with that particular company. And we just printed the Series A in January. And so I think everyone is looking at this space, trying to figure out how to play it.
Right.
And I think you can play it from the provider side, which, you know, has a little bit more difficulty to scale because you're building a business on the back of physicians. Or you can build it from a wellness coaching perspective, you know, delivering wellness coaching to corporate America or things of that nature, which tend to scale easier.
Right.
But at the end of the day, the real shortage in the mental health industry is on the provider side. There just aren't enough psychiatrists. And so we've taken the position that we want to bet on that arbitrage.
Interesting. You say red hot in this whole area. Is it red hot to the point that we're going to have a lot of companies and then ultimately there'll be some major players, or will it be kind of a fragmented market going forward?
Well, I think it depends on how you define the space, because as I mentioned earlier, it can be very broad what you consider to be mental health focused.
Yeah.
I think on the provider side, I mean, look, there's only so many psychiatrists in the U.S. There's a shortage of psychiatrists. So there can't be too many companies, because at the end of the day, there's just not enough folks to work at them. So, telehealth is enabling the service of a limited number of psychiatrists to be delivered to the masses. And so that's where we've kind of placed our bets, is saying, well, look, you know, we know that there's a shortage here. And yes, there is some problems with scaling this quickly. But, you know, if you get it right, when you get it right, it's a very, very valuable business, because you control the most valuable asset, the physician.
Yeah, no, it's a good point. Hey, listen, just got about 45 seconds here left. When you look at this year, this upcoming year, I love talking to leaders, investors, just about what the visibility looks like, what it looks like from this vantage point. And again, just got about 40 seconds.
Well, we continue to see great deal flow, right? And I've been very encouraged about what we're seeing in the southeastern United States, in the Midwest. We're continuing to see things on both coasts. Very mature companies, you know, north of $1 million of ARR, which is unique, and we're continuing to see that as a general kind of a thesis. 10 years ago, maybe 15% of the companies that accessed the Series A had revenue. Now 80% do.
Wow.
So it's a great environment. So I think we're positioned very well, and we're pretty excited about what this year holds.
All right. Well, looking forward to talking to you. Excuse me. I got choked up there. Looking forward to checking in with you again to find out how those investments are playing out. Cameron Newton, he's founder and chief executive officer at Relevance Ventures, joining us on the phone from Nashville, Tennessee. All right, just a reminder how we closed on this Monday. Dow up 1.1%, the S&P 500 a gain of 1.4%, and the NASDAQ, the outperformer, a gain of nearly 1.7%. Sound on with Kevin Cirilli coming your way. For the Business Week team, I'm Carol Masser. This is Bloomberg.